Assalamualaikum and hello everyone. Welcome to my channel. If you are new here, welcome back to those who are returning to watch another tutorial video which is on the preparation of financial statement for publication. And today I'm picking up another question which is which is the final assessment February 2021 FAR270. This is the final assessment conducted in UITM Perak Tapa campus. So I'm going to start with you looking at the question, and the question is question 1, which is 30 marks. The trial balance of upward berhad is what was given as at 31st of December 2020. So the reporting date is 31st of December 2020. And then you have another information that the financial statement will be authorized on 1st of March 2021. So this is the authorization date. So the period between 1st of January 2021 up till 1st of March 2021 is the post-reporting period. Should there be any events that took place during that post-reporting period, that is what you will consider as events after reporting period. The issue is if that is adjusting or a non-adjusting event. Okay, that is the information that the financial statement will be signed by the board of directors. So that is the authorization date, the day that the financial statement are being approved. So you have the information there, the which is the revenue, all those items that you are always used to. So revenue, you can jot down there on your own. This is item in SOPL, cost of sale in SOPL. Okay, I'm going to use some color here. So the revenue SOPL, cost of sales SOPL, finance cost, distribution cost, tax paid as well, because we're going to see how much is the tax expense. And then you also have item that goes to the SOPL, investment income. Okay, you will also need to show items which are related to expenses. Let's look at, you have any finance costs? Yes. Next one is we're going to look at what are those items that will go to the PPE, which is what goes to the SOFP. This is what goes to the SOFP, all this. But you need to go and do adjustment first. The one related to depreciation, revaluation, surplus, any disposal or addition. That was up till motor vehicle. That one will go to the current asset, the non-current asset section. Same for the bank and inventories and investment. Only that bank and inventories are your current asset. Same goes for investment. It is a non-current asset. Trade receivable, and trade receivable should have been adjusted with the allowance for the trade receivable. Okay, next is that you have the information regarding long-term loan and the trade payable. So these are also items that will go to your SOFP, but that is the non-current liabilities item. Apart from that, you have items that you need to include that in the statement of changes in equity. These are the items, share capital and the retained earnings. Okay, you are done with that. All those items that are being given there, you may have to see what are the adjustment. Right, this one should be pink. This stick pink. Okay, another blue here, turquoise, I guess. This one. Okay, done. Let's look at what you have at the bottom. you have the additional information at the bottom here. The first one, so let me just zoom it a little bit, so this is going to get bigger there. You have included in the revenue from sale was a transaction worth 10,000. This is the transaction that is being included in the revenue, 10,000. However, you are informed that performance obligations have not been fully completed. And if that is the case, you need to do adjustment. The customer has made full payment and the payment receipt was properly recorded. So this is a proof that there was a revenue that was not yet earned, but you have recorded. So that is actually a contract, a liability. So it shouldn't be recognized as a revenue. So therefore, you need to remove from the revenue by debiting the revenue and crediting the contract liability. So that has to be adjusted in the SOPL as well as later in the SOFP under current liability. That was number one. Number two, company was sued by a customer. So this is going to relate to Mfrs 137 due to the faulty goods. So you are being sued by a customer. So that is some kind of obligation that you may need to face, but you need to go and check. So there is a legal obligation, and accordingly the company, it is probable according to the lawyer that the company will be liable. So the outflow is probable. So there is a present obligation, the outflow is probable because the company will be liable according to the lawyer's opinion, and they need to pay 20,000. And according to the lawyer, the amount, which is a reliable estimate, is that 20,000 to be paid as a compensation for damages, and that need to be paid within 1 year. So that will give rise to a provision for compensation. There be compensation expense, which is going to be shown in SOPL under other operating expense. You can also put under admin, but I'm going to put under other operating expense. Credit provision for compensation, that will be put under current liability because it has to be, you need to pay within 1 year according to the lawyer's professional opinion. So 20,000. The next one is on Mfrs 102. The net realizable value of the inventory was 110. Compare this NRV with the inventories here, right? Or compare that, you will see that there was a reduction of 10,000. So that reduction, debit cost of sale, there was a write down in the SOPL later. Credit inventories, that is going to be in the current asset in the SOFP, 10,000. The next one is about the Mfrs 9, which is a customer that owes the company 2,200. That customer was declared bankrupt on 31st of January 2021. So pay attention on the date. The date they were declared, or the customer was declared bankrupt, was before the authorization date. Authorization date was 1st of March. And this is actually events after reporting period, and this is an adjusting event since the declaration of bankruptcy happened on 31st of January. So that events provide further evidence on the condition that existed as at the reporting date. Yeah, why? The customer already, so the company has already provided some allowance for some kind of impairment of receivable, right? So therefore, this has to be adjusted. It need to be adjusted. You need to go and write off the customer as a bad debt. So if you write off as a bad debt, debit allowance for impairment of trade receivable, that will be in the SOFP 2.2 million, sorry, 2.2, which is 2,200. Credit trade receivable in the SOFP 2,200. So done with that, you will do the adjustment in SOFP, and you need to also check in certain questions if there is any adjustment to the impairment, right? In this question, none. Next, 1st January 2020, the company sold one of its motor vehicles. So this is a derecognition, and that was for cash. So for cash, this is not a replacement, but this is a disposal, and that was for cash. That is 25 25,000. So that 25,000 is what you need to debit to the bank. You need to find what is the profit or the loss, and you need to also look at what is the accumulated depreciation that you need to go and eliminate, and that was given in this question. The date of disposal was 1st of January. The motor vehicle was bought 2 years ago, so this 30,000 is the cost that was purchased, and that was also the same cost that will be disposed. So that 20,000 will have to be de-recognized, and the motor vehicle account will have to be credited. The accumulated depreciation also will have to be eliminated, and you need to eliminate the accumulated depreciation of the disposed motor vehicle only, the one that is being de-recognized, and that is for this 30,000 cost. That is the one that you need to go and eliminate in terms of its depreciation, accumulated depreciation from the date it was purchased 2 years ago up to the date it was being disposed. So here is the journal entry, debit bank, that will be in your soft P. So that should be in the soft P here. Soft P, okay. This is soft P actually. And debit accumulated depreciation, that has to be adjusted in your notes to the PPE later, yeah, because that is being removed. So you need to go and remove from the accumulated depreciation. You need to show the increase in bank account in your soft P, and the gain on disposal would be the difference between actually the carrying value. The carrying value here is 30,000 cost minus the accumulated depreciation 6,000, so it would be 24. So that 24,000, if you compare with 25,000, there was a gain of 1,000. So the 1,000 gain will be shown as an other income in your SOPL. This 1,000. This one will be shown in the soft P as an increase in bank. This will be in the notes to the account, and this will also be shown in your notes to the account as the movement of PPE in the Ppe schedule. So if you look at the requirement of the question, these are of the same requirement that you are asked to normally prepare, which is to prepare the SOPL, so statement of changes in equity, statement of financial position, and the PPE schedule. So make sure you read the requirement before you start. Okay. Next, you have to do that first. Next is the depreciation. Just calculate the depreciation. Be careful with the depreciation on motor vehicle, because for motor vehicle, you can see the one I used blue here, that is being disposed. So you need to first take into consideration that for building, it was 5% per annum. So it should be 5% from cost minus accumulated depreciation. Check the cost. You can check the cost, 600. And the accumulated depreciation 30. So you have 28.5, 5%. Motor vehicle, it is on cost. So cost, you do not need to go and adjust with the accumulated depreciation. Same goes for the plant and machinery. So for the land, no depreciation because this is a non-depreciable asset. So I checked all this already. Right. Now, we will have to calculate. So 10% from 250 is the one that was the cost. Here, motor vehicle, you need to take 150, which is the cost. 150, this one. And you need to remove the cost that were being disposed. This one. You remove that, you will have 120. 120 times 10%, 12. So remember to include motor vehicle in the distribution cost, because motor vehicle were used to deliver goods to the customer. So they are used for selling and distribution purpose. Building and plant machinery will be part of admin. Next, number 7. These are the dividend that will be declared. Dividend that are declared still within the reporting period. So if the dividend were declared within the reporting period, this is the end of the year. Remember, reporting date was 31st of December. This is going to be a dividend that you need to go and charge as a liability. So that will be debited to the retained earnings, remove it, and that is an appropriation of profits, 150, and it will be credited to the final dividends payable, that will be under current liability, 150. So go and include that. Check if you have any interim dividend in the list of balances. You don't have. Next, include that in your adjustment. So this has been done, this has been done, all this. Make sure you check all that done. And we are now doing land, revaluation of land. It was revalued to 320. This is the fair value. Directors decided to incorporate this fair value and incorporate that as the revalued amount. So that what you need to do is to compare the fair value 320 with the carrying value. So the carrying value of the land is 250, which is at cost. No depreciation because it is a non-depreciable asset. So 70, debit land, that has to be adjusted later when you prepare your notes, add with the surplus. When you credit your ARR, make sure that you will show that 70,000 in your OCI, other comprehensive income, and also later it will be shown in the statement of changes in equity under your asset revaluation reserve. Number 9 is just an adjustment on accrued expenses, accrued audit fees, 60,000, and the director's remuneration. This is what you need to charge as a liability, current liability, as well as that will be charged also as an expense. So debit director's remuneration 50,000, credit accrued director's remuneration 50,000. Do that yourself. Audit fees, debit audit fees 60,000 and credit accrued audit fees 60,000. That would be in your current liability. Current liability for the accrued part, but for the expenses part will be part of admin. So this is information on tax 60. So what you need to do is compare the tax paid with the tax expense. You paid 65 from the trial balance, information from the trial balance. You have the tax paid here, 65. Then you will find that there is a tax recoverable since you have overpaid. Tax recoverable will be a current asset. So now you can go and prepare your financial statement, and you can include this item that you have. We start off with the item in revenue. So the revenue will be included here. So I have already prepared the blank template again. So the revenue will have to consider the decrease in revenue, which is the current liability, contract liability. Okay, 250,000 minus the unearned revenue. The cost of sale, you are going to include the write down amount. So write down amount is the what we have discussed earlier, which is this one. This is the write down amount. Yeah, 10. The revenue is the one here. So make sure you have checked that as well, together with your inventories, right? That is the case. Next one is other income. Remember I mentioned to you other income. There was a gain of 1,000. Include that in other income. I'll go and find out admin expenses, but before that I'm going to include my other operating expenses from this adjustment. Adjustment number 2, where we have your compensation cost. I put it under other operating expense, and at the same time it has to be shown as a provision under your current liability. So it has to be shown here. Let me show you. It has to be here, provision for compensation. The figure should be 20,000. Next, The inventories also should have been adjusted because of our write down that we have done earlier. So it should be written down to 110. Make sure you do that. Next is admin expenses. For admin expenses and distribution and also the finance cost, I'm doing it straight away. Put the trial balance figure first. I'm taking it from here, here 1, and here you have your finance cost, here is distribution cost. Okay, check here that you also have directors remuneration apart from just having the accrued directors remuneration that we have discussed much earlier. Now what we need to do is we are going to find out what is the actual directors remuneration. So 530,000 is actually 480, this one, plus your directors remuneration here. So therefore that is going to be here 480,000 plus 50,000. Okay, that is the detail that you need to include. Next is your auditor's fee. Auditor's fee, it was from the accrued expenses, and this is accrued expenses on audit fees. Depreciation, so there are lists of depreciation here, and I have already calculated much earlier. Just go and copy paste that. Okay, remember that this was from here, here. Okay, make sure you do that. Okay, then let's just check. Right. Okay, next is the item on investment income that we will also consider later. Before that, let's just get the total. Okay, this total, transfer it here for the admin and selling, the same total. And for your finance costs and it should be the same as what you have there, 50. Investment income is from your lease of trial balance here. Okay, there are no adjustment to the investment income. Don't get confused with the investment. This is a non-current asset. So doing the classification will help you to get it right. Income tax expense, just include the income tax expense here, right, which is the 60,000 that you have been given in the actual tax expense here, this one, right. Next would be the other comprehensive income that you have calculated earlier, 70,000 as a result of the surplus on revaluation of land, and this is your profit for the year. Done. We move on to the next section, the changes in equity that is reflected in the statement of changes in equity. You will see that there are no balance for the ARR. The profit for the year will be included under retained earnings. The revaluation surplus under the ARR. The dividends will be under retained earnings. Don't put under ordinary share capital, that is wrong. The 150,000, remember, retained earnings. So don't go and put under finance costs unless this dividend is redeemable preference dividend. This is not redeemable preference dividend. So therefore, this is just the dividends paid to equity shareholder. And therefore, you have your balance at the end of the year. Done with that. Next is to look at your statement of financial position. I will do the PPE last. I will start with the simple things first. Investment, no changes. just pick up the trade receivable. You need to go and include those adjustments that you have done. Remember earlier you credit your trade receivable with the bad debt that you have adjusted since the debtors cannot pay, right? Confirm that it cannot be collected. So that was removed here. So therefore the allowance has reduced to 4,008, and the trade receivable was also reduced to 62,800 due to write-off. And at the end, the net realizable value is 58. The tax recoverable, and the tax recoverable, yes, was 5,000, and the bank balance 1275 here is as a result of, if you have the bank balance 1250, but you need to add up the 25,000 proceed from the disposal. So we will do the working here now. It should be 1250. Sorry, the workings is already here. I just will copy and paste card and paste it here. Okay, that was the bank balance. Tax recoverable, this is as a result of 65,000 minus 60. Okay, done. We are almost done with our asset. Next, equity. Just copy that item that you have already calculated here. These two item will be under your reserve. This one, your share capital, will be here. Okay, reserve is whatever reserve that you have in the company that is in the statement of changes in equity. Loan from Bank Islam, no changes. Trade payable, also no changes. Contract liability, I already explained, that was due to the first information. Then you have all the directors' remuneration and the dividend payable, or I would suggest you to write down final dividend payable. That was actually from our information. That's it. That was your statement of financial position. Now we proceed to our Ppe schedule. Put the cost and valuation figure and put the balance at the beginning. Put the balance of the accumulated depreciation also at the beginning. Make sure you have those columns there. Land, no depreciation. Building, plant and machinery and motor vehicle, and also your total column. Surplus is only for land. Put that there. Addition, in this question, there are no addition unless you have purchased an asset or you have incurred some subsequent expenditure that improve the future economic benefits or the value of the company. That has to be included here, none. You have a disposal. Remember the costs that were being disposed from our journal entry earlier, 30,000, the motor vehicle. The total cost or the valuation for the land, for example, is 320, and building as well. You have the figure all here. And please make sure that you leave a space and then only you write your accumulated depreciation. The first figure is the beginning balance, and disposal is only for motor vehicle. None of other PPE were disposed. Charge for the year refers to the depreciation. Just copy and paste those depreciation that you earlier calculated here. This figure. Okay, this the figure here. And the total figure should be 65,500. The carrying value, the accumulated depreciation figure at the end of the year is 58,500, 50,000, 21,000 respectively. And this is the carrying amount, which is 90 And the carrying value of the total PPE is 1160,500. That will be transferred here. 1160,500. Okay. 1160,500. I have to. Okay. That is the figure. It should be 1160,500. I will correct them here. Okay. Okay, right. Done with the preparation of financial statement for publication. Here there are no other notes except for the PPE. I thank you for watching. I'll see you when I will see you. I'll go and practice more. With practice, you'll be reducing your mistake from time to time. Thank you for watching. Catch me later in my next video. Assalamualaikum.